Welcome back. Now, JSPL is a stock that has been in focus and along with the pack, in fact. We're joined by the management, VR Sharma, who's the managing director of JSPL. Thank you so much, Mr. Sharma, for joining in. And it's a great time to talk about this because of everything that's happening in the sector. But I want to start by asking about the margins, because that's something that a lot of people are focusing in on. They've increased on a year-on-year basis, but on a sequential basis, it has decreased from 42.7% to 33.7%. What are the challenges that you faced in the quarter gone by, and how do you see this panning out over the course of the rest of the year?
There are two reasons. First of all, the input costs that has increased because of the higher coking coal prices and some of the ferroalloy prices and other consumables. Secondly, we were having a opening stock of iron ore, which was in the premises of SMPL. That has been consumed now, and this is the reason you are seeing that the margins have come down, but still we have a Ebitda margin of more than 20,000 rupees per ton. We are thinking that we'll be maintaining a similar Ebitda level in terms of margins, maybe 20 or 21,000 rupees per ton in the rest of the year.
Sharma, another factor that a lot of people are talking about is the availability of coal. What is the current supply constraint that you're facing on coal, and how is the company managing this?
Yeah, we are lucky that we have now 3 mines in operation overseas. One is in Mozambique, the another one is in Kippersol, that is South Africa, and the third one recently started in Australia. So out of the 4 mines, 2 in Australia, 1 in South Africa, and 1 in Mozambique. So 3 mines are working. We are now bringing coal from all these 3 mines to India. We are now, I would say, self-reliant in terms of coking coal by 60 to 70%. Balance 30% or maybe 40% we'll be sourcing from outside. We have some long-term agreement with some of the large players. Now, recently, Government of India encouraged steel industry to buy coking coal from Russia. So we sent our delegation with the Honorable Minister of Steel, that is Mr. Singh. And we found that, yes, we can do a great business with the Russian coal miners. So we are thinking now that at least 20% of our total requirement will meet out from Russia. Balance 20% will meet out from Australia, and 60% we will be meeting out from the captive mines in Africa, Australia, and Mozambique.
Mr. Sharma, also wanted to understand, how is it that you're seeing coking coal prices heading in Q3?
Yeah, the coking coal prices in Q3 now, I would say that from 4th week of November to December, and then finally also in the Q4, will be softening. Already the signals and already the trend is showing that the coking coal prices as well as steam coal prices are coming down. So I'm sure that at least $50 to $70 of reduction will be there in next 6 to 8 weeks time in coking coal prices. Already the freight prices have started falling down. The Cape size freight is coming now at about $16 a ton, which used to be about $27, $28 a ton. So this is a recent development in last 2 days. So I'm sure the shipping industry will definitely come to a point where they'll be offering very good freights or attractive freights to the importers. So freight from Australia to east coast of India is now $16 a ton. So cumulatively, this will definitely reduce the overall cost burden and cost pressures in the steel industry. And finally, the benefit will go to the customers.
Sure. The other thing, Mr. Sharma, that I wanted to understand was that your consolidated net debt reduced from about 15,227 crore rupees to about 11,164 crore odd. What number can one expect by the year end?
You see, our aim is to bring the company to a level of net debt-free company. And this we are targeting by March 2022. We should have a net debt-free organization. So whatever you are seeing the numbers now, I'm sure and due to a very good margin, Ebitda levels, and the overall profitability. From accruals itself, we'll be in a position to make the company net debt free by 2022 March.
Mr. Sharma, what's the outlook on steel prices in the third quarter? Could we experience more price hikes on this front? And also, how do you see the number for realizations for the third quarter in comparison with the second?
I think the price hike depends upon the input costs, especially the iron ore and coking coal. The iron ore prices are now very much stable. We are not expecting any big change in iron ore numbers. But yes, for sure, coking coal prices are bound to come back. So we are expecting a coking coal price level somewhere about $300 by the end of December. And if this happens, then definitely the steel prices will be corrected downward. So today, the steel price, I would say, are at its peak. And if the coking coal prices go down and the other input costs that also go down, especially the ferroalloys prices, then surely there'll be correction by the end of December. Secondly, the price rise, yes, in October, we increased prices by 1,000 to 1,500 rupees a ton. This month in November, we are expecting another increase of about 1,000 rupees per ton to 1,500 rupees per ton in the flat products, and long product maybe 800 rupees to 1,000 rupees per ton. So this is the overall scenario, but I'm sure down the line, once the coking coal prices come down, then definitely the benefit will be passed on to the customers. The international steel prices are still very lucrative, and still there is a delta, there is a gap in between spot international steel prices versus the domestic prices in India. The spot steel prices are still high at a level about $100 or $150 of delta. And we feel that this particular delta or the difference will continue to a level about $80 to $100 till December end. So during this quarter, we are expecting a good net sales realization in terms of overall pricing. And we'll be in a position to maintain the Ebitda levels I told you, more than 20,000 rupees a ton.
Well, Mr. Sharma, there's also been a very clear statement of intent by the company to focus on the core business. And to that end, I think everybody's very keen to understand what the timelines are, if at all there's a development on that front for the Jindal Power sale or the deal. Is there any update on that?
The statutory compliances from SEBI and some of the other government authorities are yet to come. The lender's approval is yet to come. And thereafter, then we'll move to the state government because of the transfer of property and land, etc. I'm sure by end of this financial year, that is by March 2023, each and everything will be done.
Okay, let's move on. Mr. Sharma, great to have you on the show. Wish you and your entire team a very happy Diwali from all of us here at 18 Hour. But time for a big